Breaking into real estate can seem challenging, especially if you're starting with limited funds. However, multiple strategies are designed to make real estate investment accessible. Here's an in-depth video on how to get started with minimal capital while maximizing returns in 2024. Number 10. House hacking. Start by living and earning in one property. House hacking is one of the most practical ways to start building real estate wealth. It involves purchasing a multi-unit property, such as a duplex, triplex, or fourplex, where you live in one unit and rent out the others. The rental income from your tenants helps cover your mortgage and can even generate additional profit. To make this affordable, options like Federal Housing Administration loans allow first-time buyers to finance a property with as little as 3.5% down if they meet the criteria. With house hacking, you're not just reducing housing costs, you're also creating a revenue stream that builds equity over time. For example, if you buy a $300,000 duplex with a $10,500 down payment using a Federal Housing Administration loan, you might rent one unit for $1,200, reducing your effective monthly mortgage payment significantly. This strategy works best in urban areas with high rental demand, allowing you to create income from your primary residence. Number 9. Real estate investment trusts. Invest in real estate through stocks. Real estate investment trusts offer a way to invest in real estate without the traditional buy and hold model. Real estate investment trusts are companies that own, manage, or finance real estate properties and are traded on stock exchanges. By purchasing shares in a real estate investment trusts, you're indirectly investing in real estate and can benefit from the trust's income and appreciation. Many real estate investment trusts require minimal initial investments, sometimes as low as $500. The appeal of real estate investment trusts is that they generate passive income without the responsibilities of property ownership. Real estate investment trusts are often diversified across different types of real estate assets, including commercial, residential, and industrial properties, providing a balanced risk profile. This setup allows investors to benefit from property appreciation and receive dividends, making real estate investment trusts an appealing choice for those looking for real estate exposure with limited capital and no property management requirements. Number 8. Crowdfunding platforms. Low-cost investments in large projects. With crowdfunding platforms like Fundrise, Arrived Homes, and Ground Floor, small investors can now participate in significant real estate projects without having to purchase properties outright. These platforms pool funds from many investors, allowing you to invest in commercial or residential real estate projects with minimums as low as $10. Crowdfunding platforms offer several investment models, including equity and debt-based options, where investors can earn returns based on rental income or property appreciation. Many of these platforms provide projected returns of around 8 to 12%, paid quarterly. For example, investing $100 through Fundrise lets you join larger projects, like multifamily developments or office complexes, gaining exposure to commercial real estate's growth potential without high personal financial risk. Number 7. Flipping houses, hands-on but high reward. House flipping, while requiring more involvement, can be a rewarding strategy with the potential for high returns. This approach entails purchasing undervalued properties, making renovations, and selling them for a profit. Flipping can be lucrative if you have a knack for finding properties in up-and-coming neighborhoods and can manage a renovation project on a budget. Typically, house flipping involves buying a property below market value, investing in cosmetic or structural improvements, and then reselling it at a higher price. Number 6. Wholesale properties. Secure contracts and sell for a fee. Wholesaling is a low-capital strategy where you secure a property contract and then sell it to another buyer for a fee, essentially acting as a middleman. You don't buy the property. Instead, you find motivated sellers willing to sell below market value, secure a purchase agreement, and then assign the contract to a buyer. This approach works well if you have a network of real estate investors or buyers who are looking for discounted properties. For instance, you might secure a property contract for $90,000, assign it to a buyer for $100,000, and pocket the $10,000 difference. Wholesaling requires strong negotiation skills and a keen understanding of property values, but can be an effective way to earn income in real estate without needing significant capital. Number 5. Leverage home equity with home equity lines of credit and cash-out refinancing. If you already own a home, using your home's equity can help finance real estate investments. Home equity lines of credit and cash-out refinancing let you borrow against your home's value to fund property purchases or improvements. With a home equity lines of credit, for instance, you can tap into available equity as needed, similar to a credit card. If your home has appreciated and you have $50,000 in equity, you can use that to fund a down payment on a rental property or make value-adding renovations. Cash-out refinancing replaces your mortgage with a larger loan and provides the difference in cash, allowing you to invest those funds elsewhere. These options work best if your home has appreciated significantly and provide a low-interest means of accessing capital. Number 4. Rent-to-own. Get your foot in the door. Rent-to-own agreements allow you to lease a property with an option to buy it later. This can be a viable choice if you lack the funds for a full down payment but want to start building equity while renting. In this arrangement, a portion of your rent payment goes toward the future purchase price of the home. For instance, if you lease a home for $1,500 per month, $200 of that could apply to the purchase price. After 2 years, you'd have accumulated $4,800 in credit toward buying the property, giving you a head start on ownership. Rent-to-own agreements allow you to work toward homeownership with less upfront capital, though they may come with higher monthly payments. Number 3. Seller financing. Make payments to the seller, not the bank. Seller financing is a creative approach where the property owner acts as the lender, allowing you to make payments directly to them instead of a traditional financial institution. This arrangement is especially beneficial if you can't qualify for conventional loans due to credit issues or lack of a large down payment. In seller finance deals, you and the seller negotiate payment terms, interest rates, and schedules, which often offer more flexibility than banks. Number 2. Master lease option. Control property without buying. A master lease option is a unique method that allows you to lease a property with an option to buy at a later date, giving you control without immediate ownership. You pay the owner a lease amount while subletting the property for profit, allowing you to benefit from the property's cash flow and appreciation potential without a full purchase. For example, you might lease a small apartment building, pay the owner a set rent, and sublet the units to tenants at a higher rate. If the lease agreement includes a purchase option, you can buy the property when financially ready. MELOs are beneficial for investors seeking hands-on experience in property management with a future ownership potential. Number 1. Partnering with investors. Pool resources for bigger projects. If you lack the funds to invest in a property solo, consider forming a partnership with other investors. By pooling resources, you can access properties and investment opportunities that would be out of reach individually. Partnerships allow you to split costs, risks, and profits, enabling you to enter the real estate market on a budget. A typical partnership might involve each partner contributing a portion of the down payment and sharing income from rental properties. Ready to dive into real estate with a smart strategy? Start small, stay savvy, and watch your investments grow. If you found this video helpful, don't forget to like, subscribe, and share for more practical tips to boost your wealth journey.